India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's three guys here, as you can see. So to start the day, Mangalam is with us, joining us on the program. We're coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, as always, my colleagues Nigel and Mangalam as well. Guys, morning.
Good morning. I think, it's the middle stump, leg stump and off stump today. It's India versus US in the evening. So that is something that we'll be watching alongside what the Fed does.
I think it's going to be an interesting one because 2 days in a row now the markets have kind of done nothing, consolidated. Actually, that would be wrong to say that it's done nothing because the broader market has been just absolutely vibrant. So let's just quickly start by telling you what you need to know. Yesterday, another day of consolidation. Like the day before. And that's largely on the back of a runaway move that we've had over the last prior 4 or 5 days, right from the Tuesday lows. So, to be expected, but, it was always also the fact that the market actually sold off starting about 2:55, 3 o'clock. Otherwise, we started 2:30 with 120 odd point gain in the Nifty. And then there was a bit of drop off which happened. Overnight is positive. Nasdaq is up almost 1%. It's supported largely by US yields. US yields that hit about 4.5%. They've cooled off a little bit. The 10-year down about 7 basis points. The dollar is steady, no large up move, but is holding about 105 plus, actually 105.27 or so in the dollar index. And oil prices, they're creeping higher. Not a large move like the day before, but a 0.5% move. We're back at about $82 a barrel. Tonight is essentially the big data points. You've got the US CPI and then, of course, the FOMC. If you sort of read the expectations out there, it looks like, the Fed chair press conference, although the recent jobs data was actually, stronger than expected, and that triggered this big up move in yields. But there is a plethora of other high-frequency data which indicates that indeed, even though the headline number out of the monthly jobs data is showing that the job market is still hot, otherwise, the labor data is cooling down. So I think that should be reflected in the press conference. We've seen that over the last 2 times when the market expected the Fed chair to once again react to near-term data, which was hot, and he did not. He said, well, let's look ahead. So, that's essentially where we are at. But that's only later today, and the market will react to all of this tomorrow morning. Now, just to sort of circle back to levels here, for the Nifty, I think it's possible we perhaps see the bias is to try and buy the dip and sort of look at stock-specific opportunity, etc. At the index level, you've got to be careful because the supports are nearby. 23,050 is the first support level, which is the 40-hourly exponential average. And then the 22,900 level, which is the 23.6% retracement of the recent move higher from the lows of Tuesday. For the, and of course, on the up move, we know you need to take out the 23,400 levels, which will indicate a fresh up move. On the Nifty Bank supports the 40-hourly again, 49,469 and then 48,900. Broadly, these are ranges. On the way up, the recent high, which is 50,253, will be eyed. By the way, locally as well, we've got some data, which is, of course, the IIP and CPI numbers. The CPI number especially should be important because there is also more recent. The IIP, of course, is for April. And the other thing which is starting in a very fast manner is, of course, block sales. Yesterday, we had about nearly 6,000 crores of sales from promoters and early investors. And as Nimesh yesterday pointed out on his D Street Chatter segment, there is more coming. Names like, I think, Kalpataru, Indus Tower, and many more lined up over the next many weeks. So, in terms of single stocks, I think you should expect this action to only heat up. Otherwise, possible the GIFT Nifty will come up on your screen, but it's possible that we get some more consolidatory kind of price action. 12 or 13 points lower is what the GIFT Nifty is indicative of. Guys.
Well, that's right. It's a flattish start that we're working with. And just to highlight the big cues that we're watching for today's trading session, on the global front, we're looking at the inflation print. We're also looking at the outcome of the FOMC and what the commentary will be. And on the domestic front, the Nifty Bank, the expiry will play out the weekly expiry. So that's an important cue. What else happened in the last 2 trading sessions? Well, the Nifty is seeing some bit of resistance at around the 23,450 odd. Because both the days we went closer to around the 23,400 and we came off the high point of the day, 125, 150 points odd. So there is some resistance at higher levels. What did the FIs do yesterday? They added 15,000 long contracts. They covered close to around 3,000 short contracts odd, which brings down the short positioning. Remember, we started this series with short positioning close to around 3 lakh contracts. That's come down drastically. And if you look at it in percentage terms, well, from around 87%, now in fact, you have the short positioning that's that's come down quite a bit. So that's important as well. Let's pull up the absolute number. The net short positions of the FIs, well, that's come in at around 1.26 lakh contracts. At the start of the series, this was around 3 lakh contracts. So there is a bout of short covering that's taken place. On the client side, you have their long position, which was at around 3 lakh contracts, that's come down to around 80,000 contracts odd. So some part of that long unwinding and short covering has already taken place. The index to watch in the second half of trade will be the Nifty Bank. It's being seen selling at some higher levels. So we'll keep an eye out on that. Even yesterday, it went to around that 50,000 and came off the high point. On the Nifty side, the options data I'm looking at 23,200. The put was fairly active in trade yesterday, which gives us the level because the premium has come down to 85 rupees, but it was at around 200 rupees. So you deduct it from there. Options data suggests that's the crucial support. Otherwise, you're looking at the 20 DMA out there. And in terms of resistance, options data suggests 23,600, that's a bit of a resistance level. And the recent high, 23,400, that'll be the first level. So those are the levels you're looking at. I expect some bit of consolidation, but broader market action to continue. Mangalam, what else are you tracking?
Absolutely. Consolidation is on the cards, and nothing tells consolidation better than the way India VIX moves. And that's the one index that I've been looking at over the last few trading sessions. The India VIX actually yesterday closed below the level of 15 and it fell 10% yesterday. When all events are typically out of the way, the VIX trades anywhere between 12 and 14. But now because we have the imponderable of, the US Fed FOMC meet outcome as well, which is what implies that the India VIX is a little elevated versus, what we had seen earlier. But in any case, it's down 53% from the June 4 high of nearly 32, and it's the lowest level that we've seen all the way since May. Now, VIX is usually an implied calculation basis the prices at which options trade. It is not an input to get the prices of options. So when the VIX is lower, it implies option prices are lower, and option prices are typically lower when more options are written. When are more options written? When the street expects a range-bound index move. Secondly, when are more puts written? When the street expects supports at lower levels. So lower the VIX, it means that the market would perhaps be in a range, and at the same time there would be support at lower levels because the implied volatility of puts is inherently higher than that of calls itself. What is it that can move the market out of the range? The first thing is the Nifty Bank. Like Nigel pointed out, the second half will be extremely crucial. We have the weekly options expiry playing out, but it's facing supply above 50,000. In the last 7 sessions, the Nifty Bank has crossed 50,000 intraday thrice, but closed above it just once. That was on June 3. And even the other days, when it moved towards that 50,000 mark, it fell off from those levels. In fact, yesterday as well, we went within 30 points of the 50,000 mark. So 50,000 call has nearly 30 lakh in shares outstanding, which expire today. And for today's contract, the put call ratio on the 50,000 strike itself is sub 3. So a lot more calls written than puts. So can the Nifty Bank surprise on the upside or not is the first, thing that can move the market out of the range. The second thing will be the IT index. The IT index will lower this week on account of one, stronger than expected US jobs data, and secondly, obviously, profit booking as well. So all eyes on the Fed commentary today, then the US CPI. If those factors could move the IT index and global facing stocks, then maybe we could see some bit of move outside of the range that we're looking at. Prashant.
All right, well, Mangalam, thanks for that. Let's quickly tell you some of the views we are getting from market men. This is Surendra Goyal of Citi who weighs in this morning. He says Indian markets have fared well in June so far despite a narrow victory margin for the BJP-led NDA versus the exit polls expectations. Notably, he adds, defensives have outperformed cyclicals and domestic mutual funds and retail continue to be the net buyers. He says MSP announcement and union budget will be the next key data points to watch out for. Policy continuity on infrastructure, clean energy, domestic manufacturing, defense and electric vehicles with increasing focus on rural welfare jobs is something he looks forward to. Their June 2025 Nifty target is 24,400, which means a 5% upside from current market levels.
Right. We also have another equity call coming in from Sanjeev Prasad of Kotak Institutional Equity saying that the unexpected market reaction, which is sanguine to an unexpected result in the 2024 national elections, BJP falling short of majority, that is highlights the unusual nature of the Indian market. He says non-institutional investors remain extremely confident about making high returns from the Indian market, irrespective of prices and valuations. He adds that institutional investors can choose to fight, flee, or join.
Okay, well, that's an interesting way to put it. Let's get you some money market views as well. This is Kunal Sodani of Shriram Bank, who says that stronger than expected US data and political uncertainty after the French president called for snap elections pushing the euro-USD pair lower. In turn, has pushed the dollar index higher. He says oil demand and rising crude prices are further adding to the rupee weakness. Strong U.S. labor market data makes Fed rate cut a distant happening. He adds U.S. CPI data will be important to watch for with headline inflation expectations to be at 3.4%. Kunal adds there remains a competition between dollar uptick and central bank intervention for the USD-INR pair. The range, according to him, is should be around 83.4 and resistance around 83.72.
On the bonds, Ajay Maglulia of JM Financial says that the market is awaiting CPI inflation print today, as that may be a bit higher than last month due to higher prices, but sentiment remains upbeat and stable despite close to neutral liquidity in the system. He expects the 10-year benchmark bond yield to trade in a tight range of 6.99 to 7.03 for the day.
Well, we have a lot of stock-specific action to track for you. Get to that in just a bit in our special Top 10 segment, but we look at HCL Tech, Go Digital General Insurance, TVS Supply Chain Solutions, Tube Investments, GMR Airports, Camlin Fine Sciences, Toll Industries, as well as Wipro. All of them will be reacting to positive news flow. On the flip side, you have MTAR as well as ACE that will be reacting to negative news flow.
Cameron Brand is with us, Director of Research at EPFR Global. Cameron, good to have you with us here back on the program. Prashant this side. The big talking point has been foreigners continuing to sell India. And we've heard that it's because they're selling emerging markets. So India is part of it, so we get sold as well. Is that the main kind of flow action that you've been seeing since you track this data on a week-on-week basis closely?
As a matter of fact, especially for India, I've been seeing the opposite. Dedicated India equity funds have proved extremely resilient. And while investors seem to be reluctant to take on too much broad exposure to all emerging markets through the GEM funds, they aren't fleeing either. So certainly in the mutual fund ETF space, there's still a lot of appetite for emerging Asia in general and India in particular.
Okay, all right. So you in a way, Cameron, what you're saying is dedicated India funds are seeing inflows, but little appetite for broader GEM funds, right? That's what you're saying.
That's absolutely what we're seeing.
Okay, but at a net level, that still means that the number here, which comes as a negative on a daily basis, Cameron, when will that turn, according to you?
No, because the sort of redemptions from GEM funds are frankly not big enough to offset the money we're seeing going into dedicated India funds, which actually set a new weekly record last week. The election result from a mutual fund investor perspective has actually been very well received. I think there was genuine worry that if Modi got a supermajority, the sort of longer-term investment outlook would have been worse than the sort of more restrained mandate that he did come away with.
That's a first, because a lot of people were hoping for supermajority for the policy to continue, and you're saying that a supermajority would perhaps be long-term burst. That's interesting, but a lot of people are also looking at China now as a value bet. Where do you stand on that debate?
Yeah, I'm not surprised it's happening, but I think China is pursuing some very clear policies that put what you would regard as investor interests very, very far down the food chain. So, yes, China may be a little oversold, but I haven't really seen anything there that fundamentally changes the story one way or other. Certainly, there have been some well-received rhetorical flourishes, and hopes are riding high again that there'll be more proactive measures to ameliorate the property market issues. But I really haven't seen anything that makes me think the needle is really shifting, and I'm not seeing that in the flows or the allocations either.
Okay, all right. Final question, Cameron, before we let you go. What about gold? At one point of time, there was some incremental flows towards gold, but gold's come off a little bit. What's your reading of it?
So I agree. After a brief sort of flurry of positive flows to gold funds, they've reverted to mostly negative. Certainly from sort of a US perspective, I think part of it is that we're starting to see some retail involvement again in the fund flows after a fairly lengthy absence. And that means more money for cryptocurrency and less for sort of stodgy classic asset classes like gold.
Okay, all right, Cameron, we'll leave it there. Thank you very much for joining us and appreciate your insights into fund flows and the direction of it. As always, dedicated India funds remain extremely resilient. Well, we'll take a quick commercial break here. Rhythm Desai of Morgan Stanley will be joining in for an exclusive chat from the sidelines of the MS India conference, which is kicking off. So that follows next. And we'll ask Rhythm, when will foreigners return in full force and form? So that's the question for Rhythm in just a bit from now. Stay tuned. Okay, welcome back. Rhythm Desai is with us now. He's Managing Director and Chief Equity Strategist India, Morgan Stanley. He's joining us from the sidelines of the Morgan Stanley India Investment Forum. Rhythm, good morning. Good to have you with us here on CNBC TV 18, bright and early. Thanks very much for your time. Prashant this side. So as I was taking that commercial break, I was saying I'm going to ask you, when will foreigners return? We had the EPFR representative with us earlier. He was saying that dedicated India funds are still getting a lot of inflows, resilient. It's just the GEM funds where there is reluctance. But what matters for us is at a net level, we get money in. When will that tide turn, Rhythm, according to you?
Hey, Prashant, good to be back on CNBC TV 18. So it's a little complicated, actually. There are multiple moving parts. So firstly, EM as an asset class, especially because of China, is on the back foot. So it's actually the least preferred equity market in our global pecking order. And I think that's also reflected in the flows. So if EM as a whole is not receiving inflow, it is hard for India to receive inflow. So that's the first point. Now, having said that, when we do the calculations, we find out that fund managers with GEM's mandate, Global Emerging Market mandates, are slightly underweight India. So ideally, they should have been overweight because India is persistently a big outperformer in an EM context. But obviously, they have been worried about valuations and therefore they've been waiting for the market to correct. And the market is not obliging, so they remain underweight. India's weight in EM has gone up significantly in the last 3 years. So, we were at around 8% pre-COVID. We're now 17%. And essentially, fund managers have not been able to keep pace with the rise in India's weight in the index. In fact, one of them asked me this question 3 days ago, that what would it take in terms of money flow for GEM's portfolios on average to be overweight India? The answer is a staggering $50 billion US. Now, the largest inflow that FPIs have put into India in a 12-month rolling period is about 35. So this is a lot of money for them to put. The third is a local reason. We have domestic inflows which just keep rising. Every morning, domestic mutual funds have to buy about $150 million of stock. If they don't buy for 5 or 6 days, suddenly they have close to $1 billion in cash and more work to do because the inflows don't stop. Now, in the market, there are only two cohorts. There are the domestic investors and then there are the foreign investors. You can't get a trade unless both, if both are buying. You only get a trade if one is selling and one is buying. So obviously, foreigners end up selling. This changes, in my view, as we go into the second half of this year, because the third cohort will get very active, which is the corporate issuer. So I expect a deluge of primary deals in the next several months, and that will then allow foreigners to start buying. So if I make a prediction here, it is that FPIs will start buying India in the second half. And it's largely because primary issuances will go up. So that creates the space for them to buy.
Hi, Rhythm. Good morning and good to see you in. Nigel on this side. Hopefully they come back in the second half of the year, as you told us, with good reason. But let's focus a little bit on the domestic money. That's been the savior, right? We're just scratching the surface in terms of the number of demat accounts as well. But what if there is some kind of curb that's put on the retail participation in the F&O market? Do you think it'll sour sentiment, or do you think the investor that's putting this SIP, the monthly numbers, is very different and it will not have much of an impact?
So, Nigel, the SIP numbers have withstood a fair number of events over the last few years.
Yes.
And they only keep going up. See, the story started in 2015 when the Prime Minister allowed 401k, provident funds to invest in Indian equities. This was very similar to what had happened in America in 1980 when 401k plans were allowed by President Reagan to invest in equities. What you got then in the US was a 20-year bull run, which ended with the NASDAQ bubble. Domestic households in America were buyers all along the way, even during the 87 crash when the Dow was down 22% in a single day. So they became very resilient. A similar thing is happening in India with two differences. One is the starting point of equity ownership on household balance sheet is very low. I estimate it's about 7-8%. It's gone up from, say, 5. So it's still only, it's still single digits. In the US, by the way, that number even today is about 40%. And then the second thing is the demographics. When we entered the millennium, America had already started aging. Baby boomers started retiring and they started withdrawing their equity saving. In India, that doesn't happen for the next 20, 30 years. So we have a lot of legs to go on this. And I think that at some point in time, it's quite possible that the limit on provident funds and NPS, which is currently pegged at 15% of incremental flows into equities, that could be raised to 25. The last 9 years have been very sweet for them. They've been able to deliver good returns to their subscribers, and it's largely because of the equity returns that they are getting. So I don't see the domestic bid going away on a structural basis. There could be cyclical ups and downs, but I think this structural bid is here to stay.
All right, then, Rhythm, let's talk investable ideas. You expect 15 to 16% sort of earnings growth to continue for the index constituents, for the markets itself. You did say that a lot of the money is on the sidelines because of valuation. So where is it that you find pockets of value, and where do you think things are overheated?
Okay, so that number is actually 20%, not 15, 16. And there's a big difference between 15 and 20. We are in a market where earnings are likely compounding at 20% for the next 4 or 5 years, and that makes the market cheap. 21 times headline multiple is masking the attractiveness of the Indian markets because we are in an upcycle for growth. And I think we're just about halfway through this cycle. So there's a long way to go before the earnings peak out. And what happens is that in a bull market, the earnings and the multiples both peak almost simultaneously. If you go to the previous bull market, the Nifty at the peak traded at 33 times earnings. And earnings as a percentage of GDP was at 7. This time, I think profits to GDP will go to 10. And I'm not going to predict where the P multiple goes, but history suggests that there's more room for this P to go up. So in terms of returns, this bull market is a long way to go. Now, on the second part of your question on value, see, value is not about low P and low price to book. That's a very lazy way of assessing value. Value is when you can buy future cash flows at a rate which is better than your expected rate of return. So when you discount it by your expected rate of return, you get a number which is the share price, which is above the current share price. So that's value. And I see a lot of value in the market. I see value in many places. Just to highlight a few, I see that in private banks. I think we are in a very sweet cycle. Margins have troughed. Growth at the credit level remains quite robust. And the credit costs are not coming back in a hurry. And the stocks, I think, represent very good value. I see value in consumer discretionary, like autos, auto parts, retail, a slew of businesses that benefit from discretionary spends by consumers. I see some value in industrials, not all across the board. Industrials, I think, is probably the more tricky sector because the growth there, I think, will be stupendous, but some stocks are trading at levels which may be discounting most of that growth. So we have to be careful about making a ubiquitous call on industrials. I see value in IT services. I think the US cycle is looking up, and IT services stocks look quite attractive. So there's a lot of value everywhere. Where there is, there's limited value, I think, is in consumer staples. I don't think those stocks have the same earnings upside that the rest of the consumption space has. So I would be a little cautious there. I think we have to be very selective in healthcare. Value is not there across the board. And likewise, I think in global commodities, we have to be a bit more cautious.
Rhythm, so if the thesis is right, everything here, not everything, but if you stretch the time horizons long enough, I mean, most things will do well, right? You got to, of course, you got to be prudent, and they'll do well in waves, and something will go up first, and then something else. And so, my question now is, of course, what's right ahead of us in that sense? And I think government policy and where the government focus and thrust is likely to be, and I'm sure at the conference you will get a lot of questions in that sense from investors who are there. Where is the thrust likely to be? Some have suggested that there will be a sort of concerted push now to help consumer demand pick up. We reported yesterday on the housing bit. There is, this morning I was reading a report talking about a Somanathan plan to kind of to increase more money in the hands of retired government servants. I mean, maybe in a way go back to some of what the old pension scheme gave. That perhaps could be a way. And there is so much more which is being talked about. What is your sense, Rhythm? Important trust areas from a market-sensitive point of view.
So, Prashad, I don't think it's the instinct of this government to redistribute taxes in the form of cash in the hands of people. That's fueling inflation. And over the last 10 years, we've worked very hard to earn macro stability. And that is the basis of this economic cycle. It's the basis of how India's external deficit has contracted. It's why inflation volatility is at all-time lows. So a lot of the gains that we have accrued is largely because of this government's incessant focus on macro stability. As I have repeatedly said, the Prime Minister is an inflation hawk, and it doesn't serve the purpose of controlling inflation and its volatility by distributing cash into the hands of people. So building social infrastructure, I think, is the way forward. So we've already heard about housing, and I think
is it possible to redirect? Apologies, but since we're short on time, let me just interject. Is it possible to redirect some of this, within the confines of being fiscally prudent, to doing what I said, which is supporting, a consumption at the mass end?
So Prashant, just to shorten my answer to, the best way to do it is to fuel an investment cycle. Investments gets jobs back, jobs get cash flows back, cash flow gets consumption back. It's the right way to do it, and I think that's the way the government will do it. And what we will see in the budget is a reiteration of the transition from government spend to private sector spending. The government is going to take a step back. It did a lot of heavy lifting during COVID. I think we are heading into a primary balance. We'll be the only country in the top 15 nations in the world with a primary balance, which is hyper bullish for stocks. So it's going to come via the investment cycle, and that's how we'll filter down into better consumption.
I think we will see a big big change in the July budget as compared to the interim budget, because some of what you said, which is the government holding back, we saw that, right? In terms of the spends allocated in the BE numbers, the estimates. On roads, we saw that on so many other areas, defense and the percentage increase in FY25 BE was much smaller as compared to what we've seen over the last couple of years. And the argument back then was, of course, that the government can only do so much. The private sector needs to step in. So will we see something very different in this full budget?
Yeah, the difference between February and July is that the government has an additional 50 basis points in its pocket. Because what was not in the interim budget was the 30 basis points of extra dividends that the RBI gave. And if you recall, the interim budget was on the basis that the fiscal deficit will be at 5.8% for F24. That's actually come in at 5.6 now. So 20 plus 30, that's an extra 50 basis points to play around with. I think the overall fiscal consolidation will be ballpark around the same number, which is around, say, 5. And then you have an extra 30, 40 basis points to decide where to allocate. That's a lot of money, by the way. So the government does have some flexibility in the current fiscal year to spend a bit more than what was there in the interim. I think a lot of that spending will be targeted towards investments. I would highlight railways very especially. I think we wrote a very detailed report on this 1 month ago. I think that's going to occupy top attention of government spends. There could be, as we discussed, mass housing. And then I think renewable energy. I think that's another area which will attract a lot of attention. So maybe if I were to single out 3 sectors, these are the 3 sectors. Maybe there's a rejig on PLIs. So sectors such as defense, such as aerospace, food processing, lab-grown diamonds, these may actually get revised PLI plans.
All right, Rhythm, final question before we let you go then. Things are looking up for India. We're in a bit of a Goldilocks scenario, which is great news. What are the risks then? Crude has been fairly well behaved, which is good for us, irrespective of how other commodities have flared up. A couple of risks that you'll be tracking, and a quick comment on crude being well behaved.
Yeah, so I think from a risk perspective, we have to be careful about global growth because India is trying to increase its engagement with the rest of the world. So if global growth doesn't fare well, it does put India back. I would worry about China's deflation because Chinese deflation creates greater competition for Indian companies trying to sell abroad. And that could be a very important threat. China's currency could be depreciating, which could make us less competitive versus China. I think we have to worry about the capacity constraints that we have. There's still a lot of supply side work that has to be done for us to sustain higher growth rates in the judiciary, in bureaucracy, in education, in skilling, in health. And on oil, actually, Nigel, the math has changed for India. See, the intensity of oil to GDP has halved in the last 6-7 years. So we are less sensitive to oil. But if oil went up $30, $40 all of a sudden, then it would create near-term pain. But otherwise, I think oil is a lesser concern for us than in the past.
All right, Rhythm, wishing you a good conference ahead. Appreciate you joining in and running us through your thoughts. We look forward to touching base with you in the time to come as well. All the best for the conference.
Thank you. Thank you.
All right, well, let's move on then. And our research team is standing by with CNBC TV 18's top stocks that you need to track for the day. So let's get them up for you on the screen. Hormuz, you go first. Tell us on HCL Tech.
A couple of announcements actually for HCL Tech. I'll start off with the one they made last evening, and that was the one that they've signed a deal with Deutsche Apotheker, which is the Germany's largest cooperative primary bank. And now that deal is to enable fast and secure banking services to its customers. It's a $278 million deal, will span across 7.5 years. And Apobank, which the bank is also known as, now that became a client for HCL Tech in 2021. So it is an extension of that partnership through the form of a new deal. Now the latest announcement that they made this morning is that they have expanded their engineering and R&D partnership with Olympus, and for that they are going to establish a dedicated R&D product center in Hyderabad for managing their operations. And this center will cater to Olympus's operations across US, Europe, Middle East and Africa as well. So a couple of positive developments coming in for HCL Tech coming after the Wipro deal win as well. So expect the stock to open in the green.
All right, thanks very much, Hormuz, for that. So keep an eye out on that one. Well, Go Digit, the recently listed insurer, reported numbers, and this is the first ever sort of earnings set in their listed avatar. Yash is here with details. Yash, morning.
Well, Prashant, as you rightly pointed out, first set of numbers after listing from Go Digit General Insurance. The numbers, on the face of it, look mixed, but with a positive bias. I'll tell you why exactly that has happened. As far as, the book is concerned, that is the top line growth, has been very, very strong for Go Digit. The net earned premium, for example, has grown by 42% in the fourth quarter of FY24. The reason why, there's a positive bias, as I say, is because the underwriting performance has become weak in this particular quarter. Underwriting loss has increased by 21%, but with a little caveat. The commission and the total expenses made by the company in this particular quarter has increased drastically. So your total commission is up about 9.2 times, and total expenses, they've increased by about 40%. Despite that, the impact that you see on the underwriting performance, is very small. So your underwriting loss has increased 21%, though your operating profit has grown to about 494 crore rupees versus a loss of 9 crore rupees. Your net profit is also up about 106%. Importantly, 60% of the book for Go Digit is motor insurance, where the loss ratios are going down. Health, which is about 20%, there the loss ratios have increased as far as the last 3-year trend is concerned.
All right, Yash, thanks a lot for that. So that's about Go Digit. Meanwhile, just keep an eye out on TVS Supply Chain as well. There is a regular course of business, but incremental positive coming in from there, as they've announced a new 5-year contract with Daimler Truck Southeast Asia Private Limited. The deal value is undisclosed, but remember, management joined us post their fourth quarter earnings, and they did say that they are targeting double-digit growth in the integrated supply chain solutions in FY25, part of the business which is getting this deal from Daimler Truck. And also, they target about 10 to 12% of annual revenue coming in from new businesses and sequential improvement in margins. So the talk is being walked right now with this deal, and see some green on TVS Supply Chain as well.
All right, Mangalam, thanks a lot for that. Well, let's get in Vamakshi. She's tracking a few more stocks in the news. Vamakshi, morning.
Well, good morning, Nigel. Let me first start off with Tube Investments. The company and its arm TI Clean Mobility have signed a definitive agreement with a couple of investors. This is for additional subscription of compulsory convertible preference shares of 160 crores in TI Clean Mobility. Now, with this, TI Clean Mobility has completed tying up targeted fundraise of around 3,000 crores from Tube Investments as well as other investors. So overall, this bodes well for Tube Investments, and as a result, expect the stock to open higher today. But on the contrary, we have a couple of counters, MTAR Tech as well as ACE. The promoters have offloaded a part of their holdings in the open market. MTR promoter Saranya Reddy has sold 1.9 lakh shares on June 6th and June 7th, which accounts for nearly 0.62% stake. And in fact, with this, her stake has declined from 3.22% to 2.59%. ACE promoter Mona Agarwal has also offloaded nearly 13 lakh shares, or around 1.09% equity yesterday. And with that, her stake has declined from 25.74% to 24.65%. So overall, going with the red for MTAR Tech as well as ACE.
All right, Vamakshi, thanks very much for that. So keep an eye out on these stocks. GMR Airports is the other one we'll look out for. Vivek is here to tell us why. Vivek, morning.
Well, good morning. So GMR Airports, they were part of Jefferies conference, and they gave a presentation to analysts as part of the roadshow that they were doing. Now, what are the key takeaways that GMR Airports has indicated? Number one, they're saying that both the expansion that they're expecting both in Delhi as well as the Hyderabad airport will be aiding traffic growth as well as the non-aero revenues going forward. They also expect the merger of GIL as well as GAL to be completed in the Q1 itself. We are saying that as far as the Delhi airport is concerned, and this is something that's quite important, the company has filed for new tariff application and they're expecting that this will be implemented in the fourth quarter of FY25 itself. Along with that, the management focus will continue to remain on developing airport platform strategy, consolidating the non-aero business and reducing the complexity. They're saying that number one focus as far as FY25 is concerned will be on managing leverage. Remember, net debt inched higher in the fourth quarter. Along with that, they're saying that there are a lot of questions in terms of whether there would be dividends coming. What the company has said is that now they will continue to use cash flows towards expansion to capture growth. And what they're saying is that once the tariff increase does come through, they will be able to generate a significant amount of free cash flow, and that is something that the market is looking forward to. Remember, the stock is in the F&O band today.
Absolutely, Vivek. Thanks a lot for that. The stock did well in yesterday's trading session, has done well in the last 12 months, but with it entering F&O band, it moved off the highs in the session. So let's see where it goes today, even as commentary is positive, the stock in F&O band. But let's move on to Upasna with more stocks in news. Upasna.
Good morning. First up, let me start with Camlin Fine Sciences. The company's wholly owned subsidiary, that is in Mexico, has entered into a share purchase agreement to acquire 100% stake in Vitafor and its underlying subsidiaries. And mind you that the total debt of the Vitafor group stands at 6.5 million euros. Next up is Dollar Industries. The company signs Mahesh Babu as the brand ambassador, and it aims to open 50 exclusive brand outlets across South India by 2027. The company also aims 50% sales growth in South India in 2024 to 2025. And lastly, Wipro will also be in focus today as it launches Lab 45 AI platform designed to increase efficiencies and transform business functions. So all in all these three stocks will remain in focus today, and I expect them to open in green.
Thanks for that, Upasana. Well, here's a quick recap of all the top stocks that we're looking at. We look at HCL Tech, Go Digit General Insurance, TVS Supply Chain Solutions, Tube Investment, GMR Airports, Camlin Fine Sciences, Dollar Industries, and Wipro. While stocks with negative news flow include MTAR Tech and ACE. For the time being, we slip into a short break, but on the other side, we'll be joined by Mr. Rupinder Singh of India Shelter Finance Corporation, who will be joining in to fill us in on his take on the housing push. Stay with us. Welcome back. Well, the NDA 3.0 cabinet in its first decision has approved financial assistance to construct 3 crore houses in urban and rural India. Sources tell CNBC TV18 that the centre could spend close to around 4 lakh crore rupees over the next 5 years. Sources also tell us that a middle class housing scheme for the poor may come up for a cabinet nod. To discuss this and more, we're joined by Mr. Rupinder Singh, the Managing Director and the Chief Executive Officer at India Shelter Finance Corporation. Hi, Mr. Singh. Good morning, and thanks a lot for joining in. Well, give us a couple of details first. How much of your loans fall under this PMAY scheme?
Yeah, very good morning. So we are purely affordable housing segment, which caters loan between 5 lakhs to 25 lakhs. And normally this is a segment which there is a focus of the government also, typically in the PMAY scheme. Last time PMAY scheme which came, we were able to pull up a decent number. Though on the EM side today, it looks a little lower, around 5-6%. But yes, that brings a lot of pressure around. So all these schemes which are largely impacting the affordable sector, which is tier 2, tier 3 markets, these are the segments which we are also operating into. So that's a focus area for us. That's an initiative which also government is taking along. And I think it's a right blending between us and the schemes which government provides.
So as a percentage of your book, it's around 5-6% PMAY? Mr. Singh?
Mr. Singh, you said that the last time...
I think the line is frozen.
Yes.
So we'll just have him back. We'll try and just have him back in a bit from now. But, housing clearly has been the big push. I mean, at least the first push, and we've been talking about this actually from last week, the middle of last week, how that seems to be the most natural, straightforward way to hand more money in the hands of consumers and sort of help out with regards to housing, both urban and rural as well. So we'll try and have the India Shelter management back with us. Stocks have been doing well. This is, of course, the performance yesterday. Look at PNB Housing, look at Aavas. Home First, I think, had a big 7% move. India Shelter was up about 5%. The company we were speaking with, and so on and so forth. Mangalam, I think we have him back.
Yeah, I think, Mr. Singh, you were giving us that number as a percentage of your total book. How much was to the PMAY scheme? And also, I think you were giving us a rough number. The 5-6% was the yield?
So 5-6% is the book space which we built under the PMAY of the overall book we did last. So these schemes
repatch that line. We'll just try and repatch that line. It's we still can't get you clearly, Mr. Singh, out here, but definitely, as Prashant, you pointed out, but for them itself, they have a target of almost 30-35% sort of loan growth in this year with a spread of almost 6% with a credit cost of around 40 basis points. So it's not that they haven't been doing well. Last year as well, their AUM grew by about 40%. So where they grow additionally from this scheme which is announced is something that will be more important? And even more so, will they have to have higher provisioning for affordable housing? And is affordable housing business itself more profitable for them? Because if the yield, as he pointed out, and if we inferred that correctly, 5 to 6% on that is a lot lower than what the other businesses would yield.
The other segment I sometimes wonder, because if you think about it, all the real estate companies we speak to, they all tell us premium is doing fantastically. When the last time we heard that the affordable segment is doing anything? Not a long while, right?
Yes.
I remember we had, I don't remember, I think it was PNB Housing or another company. They said actually there is no supply. Yeah. We want to lend, but there is no supply of actual physical real estate on the affordable side. So it's not being built. So, I mean, maybe all these schemes now, especially on the rural side, the Prime Minister's rural scheme, housing scheme, I think it will change that, both from a financier side and the the builder side as well. So we'll get you more, but we'll try and have Mr. The India Shelter Management back with us on the phone line. We had a patchy line there. I think we have Mitesh and Sudarshan with us now. So let's get the technicals out of the way. Gentlemen, good morning. Great to have both of you here as always. Mitesh, flat start is what is being indicated. Yesterday, of course, was the last 30-minute sell-off on the indices. Your thoughts as we start another session?
Yeah. Prashant, I think, the index, if you look at the hourly chart, there is some supply zone forming around 23, 370, 380, 390 zone. So I think till the 20-point band is clear, there's a good chance of us getting a pullback. My idea would be to trade on the long side on this pullback and try to buy near support levels, which I have identified as 23, 130, 150 zone. So that's the area which I would wait for. In case we get a dip around that level, we'll buy, or else wait for the markets to clear 23,400.
Right. Sudarshan, your thoughts?
Yeah, good morning. See, yesterday, unusually, the markets gave a slight turn to the downside. Now, that may or may not last, but it's at least a warning for today that don't be aggressive, don't go long, just the whole hog, wait patiently. This market may be giving a message that the top has been made for the short term, or it is in the process of being made. Therefore, for today at least, my advice would be buy only on a very sharp 100, 150 point dip. Otherwise, it is best to avoid the indices and focus on stocks.
So, okay, all right, got that point. So, run us through your stocks then.
Well, Tata, that's all buy. The markets are in an uptrend. Tata Chemicals is a buy with a stop under 1,020. L&T, which is a stock everyone should have in their portfolio because of the capital intensive nature of the business, is a buy with a stop under 33.65. IRCTC is a buy finally with a stop under 1,018. It's coming out of a deep consolidation. And Astral is a buy with a stop under 2,040.
All right. So IRCTC, Astral, you have L&T as well as Tata Chem. Tata Chem actually did well in yesterday's trading session as well. L&T has been consistently doing well. Mitesh, your stock picks?
Yeah. I have one sell and a few buys. On the sell side is Hindustan Zinc. In fact, after a good rally, there are first signs of profit booking happening on the charts here. So, sorry, Hindustan Copper. So sell here with a stop at 337.5 for targets of 310.12. Then a buy on Balrampur Chini with a stop at 399. Would look at a trading target of around 420, 422. Also buy on Canfin Home with a stop at 775. Here I would look for targets of 825 and a buy on PVR. After a long time, PVR has come on the buy side. So buy here with a stop at 1350 for targets of 1430.
Okay, all right, gentlemen, we'll leave it there for now. We'll have you back in about 15 minutes or so for your 9-10 calls. We'll take a quick commercial break here. We come back, we continue our chat as promised with the India Shelter Finance Management on the other side. Stay tuned.
PhonePe proudly presents Share.Market. Open a Demat account by 30th June and get zero brokerage till 31st December on F&O and intraday, equity delivery, wealth baskets, and zero account opening fees. Download Share.Market and start investing.
Investments in the securities market are subject to market risks. Read all the related documents carefully before investing.
Xiaomi 14CV with Leica professional cameras. Make it cinematic.
कार इंश्योरेंस जरूर कराना था। अरे हाँ, मिश्रा जी को फोन करो ना। आजकल कोई ब्लैक एंड व्हाइट टीवी लेता है क्या?
नहीं।
मनी ऑर्डर भेजता है क्या?
ये सब तो पुरानी आदतें हैं।
और एको चेक किए बिना कार इंश्योरेंस रिन्यू कराना?
नहीं अगर डाल लो।
कार इंश्योरेंस हो लेना तो एको चेक कर लेना।
Welcome back. We've patched the connection back with Mr. Singh, and as promised, let's continue our conversation with regards to the PMAY affordable housing and the government push on affordable housing itself, a middle-class scheme which may perhaps be taken up for a cabinet nod. Rupinder Singh, the Managing Director and Chief Executive Officer at India Shelter Finance Corp, joins us now. Mr. Singh, you had earlier said that you were able to pull in a decent number with PMAY the last time. What are your expectations this time around, and can you tell us what that decent number was?
Basically, last time this scheme when came into picture, that has created an entire aura about the affordable housing segment. This affordable housing segment particularly is a very new sector with having a vintage of not more than a decade or so. So around 8-9 years back when this came up, it has pulled up entire sector over and bring the roller coaster effect to the business running around in the affordable segment, particularly in the financial services in that segment. Many new companies arrived and quite a few got listed also in a recent time, last 3-4 years. So this scheme is always good beneficiary for the end customer, for the dispenser companies like who are purely focused on this particular segment,
right,
and making sure tier 2, tier 3.
That's about the macros. That's about the macros, Mr. Singh. What we want to know is how much did you in particular get from this scheme the last time? What proportion of your book comprises of loans under PMAY?
So if you see among the housing segment, what we do, we are maintaining around 60% of our housing portfolio. Remaining 40% remains the loan against property. Whatever the 60% we created in housing, almost 10-12% was under PMAY. Even today, we are maintaining around 5-6% of the customers still exist under the PMAY. Those schemes are now run over around 2 years back. So that is the status today, and it has been very effective in engaging the new set of customer, bringing the traction around in the business particularly. So scheme was always a lucrative like that, where the end customer gets the benefits, and we being a dispenser around.
So, Mr. Singh, what this does is this basically, if your disbursement growth was X, this push will basically make it higher. That rate of growth will be higher. That's what it does broadly.
Yes, it definitely does. It's two things. It's multifold into that. One is this growth comes just because these schemes run around. Plus, in market also, traction comes around that side. So you'll find a lot of new activities start running, whether the new builders start getting focused around that piece. So overall ecosystem start getting an impact around that side. So it is not only around the scheme alone, it's giving you impact. Since overall ecosystem start getting an impact.
Yeah, no, absolutely.
Overall number gets impact around that side.
Got it. Could you, I know this is very early and, but we've reported, and I'm sure you've seen some of the numbers that we've put out. Could you tell us if this is formalized in the budget as many are expecting? How could this change your numbers for FY25? What is the delta here that we're looking at broadly? I mean, ballpark, and we won't hold you to it.
So, point is, any delta that is always welcome around that side. But I believe that any these kind of scheme which becomes creates a positive mode around that side. Easily can say 10-12% of delta can get any of the company. I'm not talking about India Shelter alone, but any of the affordable housing company can get a delta on that side. That's a benefit, we can get from these kind of schemes. Still, it has to come in the right shape, right picture. Government is very gung-ho for the first 100 days of the budget. They are looking for something. We are looking something around that side. If it comes in a right shape, right form, and even if it continues the same fashion it was what it was earlier, it is still going to give a hold on the better deltas around that side.
10 to 12% delta is what we can, not just you, but you're saying housing finance companies can expect. And just very quickly, Mr. Singh, compared to the last time how it was run, was there anything which needed change, which you think should change, which will help it better, the scheme better, run better?
So few things into that piece. One is the ticket size basically, which obviously now the cost of construction has gone up, land rates has gone up. Typically, these schemes cater for the cost of construction side. If the end customer gets a benefit on that will be quite helpful in that side. And secondly, when the money has to go to the end customer, there is a certain gestation period. If it can be reduced further, that can be quite beneficial for both end customer as well as the vehicles like us who are driving these kind of schemes.
Okay, all right, Mr. Singh, give us an idea about how the yield is. The yield on this part of the book, what is it? And then you'll be getting something from the government as well. So put it together, what is the blended yield on this part of your book?
So any government schemes which runs through NHB, typical affordable housing segment, they give around, spreads of 5.5%. That comes in that format. And automatically then there is some difference which goes back to the customer in some form, basically. So ultimately, end customer, they get a, decent in terms of the rate cuts and those things. And it lands up to the level of the primary customer. So there doesn't remain much of the difference within the primary affordable housing customer when these schemes are being done properly.
What happens to you? What is your net realization or yield on a scheme like this?
So we have observed that, it's a 5.5% of spreads we maintain around these kind of schemes, basically.
All right. Thanks a lot for joining in and giving us all those details. 10 to 12% is the delta, incremental delta that you can get from, something like this for, if the scheme does get announced in the budget. And currently about 10 to 12% of your housing loan portfolio comes in from this scheme with a yield of around 5.5%. With that, what we'll do is we'll take a short break, come back, get you the pre-opening, and also we have with us Indranil Sengupta of CLSA to decode how will the new NDA government impact the India growth story.
PhonePe proudly presents Share.Market. Open a Demat account by 30th June and get zero brokerage till 31st December on FNO and intraday, equity delivery, wealth baskets, and zero account opening fees. Download Share.Market and start investing.
Investments in the securities market are subject to market risks. Read all the related documents carefully before investing.
Deep Trivedi, the author of numerous bestsellers like I Am the Mind, I Am Gita, and Everything is Psychology, presents his most awaited book on money, Money and its Smart Psychology, a masterpiece that explains all aspects of money. Now available at all leading bookstores and e-commerce sites. Money and its Smart Psychology. Stop chasing money. Let money chase you.
देखो यार, जिंदगी का कोई भरोसा नहीं, पता नहीं कब फोटो पे हार चढ़ जाए और फैमिली का फ्यूचर, बच्चों की पढ़ाई खतरे में पड़ जाए। तो आज ही पॉलिसी बाजार से 1 करोड़ का टर्म लाइफ इंश्योरेंस कराओ, सिर्फ 525 रुपए महीने से शुरू।
This is TV18 and you're watching CNBC TV18.
Co-presented by Bank of Maharashtra. एक परिवार, एक बैंक.
Welcome back. This is Open Exchange live from the CNBC TV18 Motilal studio. We're awaiting pre-open rates in a minute or less than a minute or so. As we do that, let's also welcome Rajesh Palvia, who's the VP Technical and Derivative Research at Axis Securities, joining in now. Rajesh, your thoughts on the index and individual stocks?
Yeah, good morning, Mangalam. So, index, we believe that some consolidation is likely to there for some couple of days. Though we look into the option chain data, the major call writers are at 23,500 strike, and on the put base concentration is placed at 23,000 level. So we believe that for some couple of days we may remain in range for Nifty. This could be the possible rate 23,000 to 23,500, and once we able to take out about 23,500, this really can extend further. To play this range bound behavior of indices, we are initiating here a short strangle. In this strangle, we are selling call option of 23,450 strike, which was closed at around 45 rupees. And on the other side, we are selling a put option of 23,000, which was closed at around 35 rupees. So your net inflow is 80 rupees. One can keep a stop loss of 120 rupees, and once this premium shrink towards 20 rupees, one can book profits. So this could be a profitable strategy for this weekly expiry. For Bank Nifty, the major supply zone is placed at around 50,000 mark. Until Bank Nifty not able to take out this level, we may again see the consolidation in Bank Nifty on the downside. 49,400 is the key support area for this near-term structure. So till 49,400 is intact, one should use any decline to be as a buying opportunity. And again, once Bank Nifty manages to cross over 50,000, this rally can extend to 50,600 to 50,800 also. On the stocks fronts, we believe that automobile may continue furthermore upside. From that space, Ashok Leyland is looking promising. The way stock is enjoying all-time high trajectory, a long built-up was there in the stock. So we believe that Ashok Leyland can continue upward momentum. One can buy for upside target of 250 to 255. Keep your stop loss at around 230. The second stock we like from the oil and gas sector, that is Gujarat Gas. Stock managed to view breakout of its multiple supply zone on a daily as well as on the weekly chart. We believe that Gujarat Gas can extend its up move towards 630 to 640. Keep your stop loss to buy around 595. And the third stock is from pharma space, that is Biocon. Stock is consolidating at higher band of this rally. Since last 2-3 trading session, we are seeing very narrow price range for the stock. Overall structure is bullish. We believe that Biocon may continue furthermore upside towards 360 to 365. So Biocon is a buy with stop loss of 336.
Okay, all right. Thanks very much for that. So those are individual trading ideas, and we'll put out more as we go along. I think we should be getting some visuals of Mr. Nitin Gadkari taking charge. So we had so many other ministers yesterday, sort of visuals there. And today we'll have more. Yeah, he's one of the most popular ministers has been in the NDA 2 administration. And of course, he's been given continuity in terms of charge of sort of roads, highways, transport. So that is those visuals coming in, the minister, and I think the MOS with him on sort of taking charge really at the ministry. So we're of course playing out some sound bites as well. Initial kind of indication yesterday we had, for example, Mr. Hardeep Singh Puri, Mr. Scindia, and a few others. Initial thoughts about what they'd like to see, what they'd like to happen, and maybe we'll hear from Mr. Gadkari as well. So closely watched really. As far as roads and highways are concerned.
I found it interesting that he entered in an electric vehicle. I could see the green number plate. So, everyone has been speaking about, the way, there you have it, you can see the car. Everyone's speaking about the push on renewable. Rhythm spoke about it. Mr. Hardeep Singh Puri as well spoke about green hydrogen, and this perhaps makes a comment. Let's see how that goes. The optics, obviously, everyone, look at the semiotics of all these things, and we will obviously monitor things out here.
And I think he's done some work on retrofitting as well. We've seen some pictures without naming any companies, but so the focus clearly is on this renewable theme and making a greener future.
All right, a greener future that will be where the momentum of the earth lies. But let's talk about momentum itself. Momentumizer, that's our segment. Ekta joins into the stock that's on her list. Ekta.
Well, yes, I'm tracking Natco Pharma. It's a part of the BSE 500, market cap of around 20,000 odd crores. The stock has risen for 5 straight sessions. It's up 21% in the past 5 sessions. It's close to its 52-week high of around 1,180. It's up 90% from its 52-week low of around 616. Now, Nuvama was very bullish on the company post its Q4 numbers. They said that the Revlimid generic sales and the rest of the world markets exceeded expectations. They have a buy with a target price of 1,032. The triggers going forward, according to analysts, is for Natco entering new markets, inorganic growth, investing in niche areas such as CAR-T therapy. Valuation-wise, it's quite cheap compared to its peers. So on an FY25 basis, it's trading at around 12 times and FY26 around 11 odd times based on the EPS that is currently factored in for Natco.
Okay, well, Ekta, thanks very much for that. So that's Natco in focus. Well, let's move on. All eyes really from a market perspective is what next, right? From the NDA 3 administration, from Modi 3.0. We've got Indranil Sen-Gupta now joining us. He's economist and head of research at CLSA India. A sort of decades-old veteran who's sort of seen many governments come and go and has tracked policy closely. Indranil, good morning. Great to have you with us here on CNBC. Prashant this side. Yeah. So you put out a couple of notes, one this morning, but I'll start with what you put out yesterday, Indranil, where you're saying that one of the priorities of for the government, and you expect to see measures on this front, is to help with rural distress. You say that monsoons have been good, but there's about 8-9 months of the effect which needs to be countered. So just run us through what your expectations are in terms of specifics and what should we see?
Yeah. So, we had obviously El Nino, and that led to a poor crop the last Kharif. And farm income, was flat to down. Even now, you've had somewhat better Rabi, but then there's the summer heat, and we have to see how that plays out. The good news is that you get La Nina coming, so the Met thinks rains will be 106% of normal, and that should make for a bumper Kharif crop. At the same time, given that farm income has taken a hit, it's very unlikely that farmers will start spending till they have realized their proceeds from the crop, which will drag on till about December. I think the government has been taking several measures. They've extended free rice and wheat to 80% of the population. There is this Bharat rice, Bharat wheat, which are being sold at subsidized levels. Now the import duty on wheat has been brought down. I think that there will probably be further measures funded by this $12 billion of additional profit transfer that the RBI has been able to make. So one of the options is to raise the farmer subsidy maybe to 8,000 rupees from 6,000 rupees, costs about $2 billion. Another could be to offer, one woman per poor household, 1,000 rupees a month, and that will cost about $12 billion between September to March, which will be met by the RBI. And in subsequent years, you would see 0.5% of GDP of the spending from the budget. So I think that given that the government has this option of higher RBI income, maybe, they will shift to funding, welfare schemes or try to help rural India.
But it's not a shift away from focus on some of the investment schemes, right?
No, this year there is no conflict. Next year we have to see. But this year, since you have this additional money from the RBI, there is no conflict.
But even in the interim budget and FY, when they presented it, for many of the capex sectors, I mean, roads, of course, is top of the list, which is closely tracked. The rate of growth of allocation, FY25 budget estimates, was far lower. And that is, of course, because government has already, over the last many years, done a lot of heavy lifting. So you expect that to continue when we get the full budget?
See, there gradually has to be a lower pace, given the amount that has been put in by way of public capex. Plus, if you are trying to bring down the fiscal deficit to 4.5%, then, naturally you have to slow down on the public capex side. And I think the Honorable Finance Minister said that we have done the heavy lifting now, at some stage private capex will come in.
How much of these contributions, as per you, could actually return back in the form of GDP growth for us?
So I think that, if you look at econometric studies, they say that $1 of, government consumption-based spend brings $1 of GDP, a rupee of GDP, and a rupee of capex spend brings about 2.5 rupees of GDP. But the point is that 2.5 rupees takes a long time to come. So therefore, maybe, somewhere you need to balance both the immediate as well as the future.
In really just one point, this morning you put out a note where you say that the Somanathan committee recommendations on how to administer pension for government employees, that may come through, right? Now, they are saying that the old pension, the committee essentially said, your conclusion was that if the recommendations are implemented, about 75% of what the OPS, the old pension scheme for people who retired before 2004, I mean, that income can come through as pension, right? If these recommendations are implemented, how likely is this likely to go through, in your opinion?
See, I wouldn't know that, but, based on media reports, what I understand is that if the OPS was worth about 100 rupees. The NPS was worth about 21 rupees. And, if Mr. Somanathan's proposals, as reported in the media, go through, then, the new scheme would be worth about 73 rupees. And, clearly, given there would be a boost to incomes of government employees, we expect a fillip to discretionary demand, whether it is in autos, whether it is in housing.
Right, Mr. Sengupta, thank you for putting all those points on the table. Of course, we will connect once some of these actually do come to fruition post the budget, and then take a call from where it goes all from here. It's 9:10. Let's get in the 9:10 calls once again. Sudarshan joins in. Sudarshan, what's your 9:10 call?
Well, consider buying L&T with a stop under 33.65.
Mitesh?
I'll recommend a buy on Balrampur Chini for targets in excess of 420, 422.
Okay, all right, gentlemen, thanks very much for that. We'll track market opening in about 3 minutes or so. We'll come back to you later. IndusInd Bank should be in focus as well. Abhishek is here to put the spotlight on this one. Abhishek.
Well, Citi has written on IndusInd Bank. They have a buy recommendation, target price of 2010 per share. Now, they met the management of IndusInd Bank, and the key takeaways that the deposit growth will be at advances growth will be at 18 to 20%, which will be driven by the retail portfolio, balanced vehicle mix, scale up of new business, as well as the MFI portfolio, which will continue to drive the loan growth momentum for that. Deposit will gather pace. They estimate a deposit growth of 16 to 18%. Which means that, slowly and steadily they'll improve on their credit deposit ratio as well. The net interest margin guidance is about 4.2% to 4.3% for FY25. A favorably position with respect to the interest rate cycle as and when it turns. So they will contain the slippages at less than 2% for FY25, in which the product-wise, slippage ratio will be 2.5% for the vehicle portfolio, 4% for the MFI portfolio, as well as 0.5% for the corporate book. They will contain the credit cost between 1.1% to 1.3%. They'll continue to invest into distribution as well. So cost to income ratio will remain elevated for IndusInd Bank in FY25. Back to you.
Thank you so much, Abhishek, for joining in and filling us in with those details. Let's tell you about a cement note coming in from Motilal Oswal. On prices, they're saying that prices were flat in May. But in June, across India, we've seen a price hike of around 8 to around 10 rupees odd. And because of that price hike, now you have average prices that are up close to 3% in June that you compared it with the May. Though for the quarter on a sequential basis, at least as of now, the pricing is more or less flattish. Prior to this hike, actually, the prices were lower in this quarter in comparison to quarter 4. On demand, they're seeing the growth was muted in April, but they're seeing a good bounce in the month of May with an estimated volume growth of around 5 to 6%, which is led by housing as well as infrastructure segments. And they're broken up the year into two halves. In the first half of the year, they're seeing growth of around 5 to 6%. In the second half of the year, they're seeing 8 to 9%. So the blended number will be in the vicinity of around 7 to around 8%. On input costs, they're saying, yes, input costs have cooled off, but the benefit comes in only in quarter 3, and their preference in terms of stocks, Ultratech is a large cap name, Dalmia and JK Cement from the mid cap space. For to finish, let's get the...
I think markets are trading, right?
To finish is what it is. The GIFT Nifty actually indicated a flattish start, but the market's anything but that. It's a 40-point uptick that we're seeing on the Nifty. The mid caps continue to do well. The Nifty Bank is actually underperforming a bit, but too early to call it an underperformance, so to say. Broader markets, no problems. 5 stocks advancing for 1 stock which is declining. So let's look at some of the stocks which are in focus. HCL Tech, of course, is the big gainer, the top gainer on the Nifty. And that's largely on account of that near $300 million deal that has come in with Olympus. Apart from that, we are seeing some traction in oil marketing companies as well. BPCL is doing well, up around 2%. Tech Mahindra, Coal India are the other gainers on the way up. On the way down, though, we are seeing some bit of decline in Asian Paints, Titan, a couple of these consumer discretionary names seeing a wee bit of profit booking. ICICI Bank is the other one, which is mildly in the red. Nothing really to worry about, so to say. Oracle, however, is up around 4%, though it has nothing to do with the Oracle that was up in after-hours trade in yesterday's trading session overnight in the US. Biocon also seeing some bit of profit, taking down about 1.5%. BHEL is the other one, which is down about 1% as well. broader markets, of course, Nigel, doing a lot better.
Well, that's right, Mangalam. A few stocks that are bobbing around. You have some of these mid-cap tech names that are doing better. You have, Birlasoft that's higher in trade. Persistent Systems as well was up close to 2%, and Emphasis as well was higher in today's trading session. Both seeing some profit taking. Biocon has come in for some profit taking. BHEL as well has come in for some profit taking. The headline index, mind you, is now up close to around 70 points as we speak. So good move is what we're seeing, at least on the headline index. But from the broader markets, well, Heritage Food is down close to around 4.5%, Mangalam. Jaicorp started off in the green. That as well is moved into the red. TVS Supply Chain, as Mangalam told us earlier today, that agreement that they have signed, it helps them in terms of the volume growth that they have been talking about. So good move out there. IRB as well popped up 2.5%. And SCI Land, that's one of the top volume gainers actually, up close to around 6%. Even SCI is up close to around 5.5%. Prashant.
Well, it's coming up as a very large sort of volume mover. 50 points, by the way, on the Nifty is what we have. 23,300 plus. The Nifty Bank will come up for you on your screens. That is also up about, but it's flat. I mean, 38, 40 odd points and a 50,000 index that constitutes flat. Mid-cap index will come up. That is up 0.5%. And the small cap index is 0.5% higher. I mean, mid caps and small caps far outperformed what the Nifty did yesterday, so that continues today as well. So a few other names, right? And I think at the risk of some repetition, but HCC is up. It'll come up big mover yesterday, 3%. It's the top volume-led gainer today. Oracle Financial Services, I think we mentioned that, 5.5% higher. Reliance Power is coming up with a 5% pop. Very large volume, so that's the reason why we are mentioning it. JP Associates is the fourth biggest volume-led gainer on the NSE. Go Digit Insurance, Yash highlighted the numbers, 5% first after it came to the market. So 352 is where Go Digit is at. You've got what else? Paradeep Phosphates, which I think is starting higher, sharply higher right now, 4%. There is a stock called Kriti Industries, again, large volumes, and its limit up 20%. I don't think it's ever come up here on the screen. 164. Schneider is up about 5%. 862 right now. There is Dollar Industries, which is up about 5%. I mean, I can go down the list, but volumes then kind of sort of start to taper off very, very fast. Yesterday, I think was the first time names like these Heritage Foods and KCP are all pulled back after the frenetic rally that we had. KCP, etc., were down about 5, 6, 7%. Heritage is down about 5%, and it's down. And KCP perhaps we could pull up as well. Otherwise, I can't spot any large volume-led loser at all across the board. So that's the picture.
Many. And just a word on Dollar Industries. You said that is one of the gainers today. They've appointed the services of Mahesh Babu as a brand ambassador to increase their business in the south, and they are aiming for 50% sales growth coming by in the southern part of the country itself. And that explains the sort of up move that we're seeing here. Dollar Industries, mostly an east-north sort of facing company, now increasing their presence in the south. And we have some traction in a lot of these PSUs. Nigel, you pointed out SCI Land and Assets. Look at Dredging Corp. That's the other one which is up 10%, and a fair amount of volumes there as well. So locked in that 10% circuit. Bunch of these stocks actually doing well.
Well, that's right, Mangalam. And just one more stock, Sun TV. The stock has gone to its highest levels I think we've seen in the last 5 or 6 years. We've been highlighting this actually, that valuation-wise things look good. 30,000 crores of market cap. They have around 5,000 crores approximately of cash in their books. They have that IPL franchise as well, doing in a bit of 2,500 crores. So valuations are always supportive. I recall, 2018, the stock went to more than 1,000 rupees. And from there, it more than halved. But now in the last few days, the stock has seen a good move. Yesterday as well, it was one of the outperformers. And in today's trade as well, it's up. For this month, the stock is up close to around 18%. One of the top volume movers today.
I think I saw a broker, I think it was Axis Capital. I think it was yesterday, highlighting valuations are also
very
completely out of whack. I mean, and there are not that many plays, right, in that space. There's Sun TV.
The problem, I think, is that political risk, right? Which
has turned out to be a...
Absolutely.
Which is currently a favor. The big trigger for them, however, irrespective of the valuation and all that, is are they going to unlock value at any point in the Sunrisers? And the way they performed this time in the IPL, of course, they would extract a little more value, but that's exactly what
just two things, Mangalam. One is use the cash in your books. What are you sitting on so much of cash? Second is unlock some value. But I think we've spoken enough about it. Let's get to our next guest.
There's one more, sorry, this one thing which is a long, I remember, I don't know, so the promoter takes, I think, it's a large chunk as a like as a fixed as a percentage of profits or something, if I remember it correctly. So I remember there used to be a lot of angst back in the day that should be corrected. But we'll get the latest on this one. But as Nigel said, enough about Sun TV. Let's move on. 773 on the price there. Markets holding with a 50-point pop. Dheeraj Agarwal of Ambit Investment Managers is with us. Dheeraj, good morning. Good to have you with us here. Thank you for your time. We've been getting a lot of commentary and views and opinion about what happens next, because it's all about policy. There is, the continuity as far as top cabinet berths are concerned and who's running each of these ministries. And now, will there be continuity in policy, or will we see newer things? Housing is one that we highlighted. Our colleague from Delhi, Sapna, highlighted what is likely to happen there. So it's a big push on housing. What else, Dheeraj, are you guys sort of working on? And because it's all about finding ideas, and a lot of it has got to do with where the government will push. What's your sense?
So I think by and large, the policy continuity will be there. And the message which the government has given by maintaining a stable cabinet as compared to the last time for all the key portfolios is very, very clear that by and large, this whole thrust on growth through capital expenditure and infrastructure development is going to continue. Now, there could be some tweaks on rural programs or consumption boost, etc., which many actually felt even in the last budget that it was conspicuous by missing. And that's the segment of the economy which is seeing a little bit of a stress. So that's possible it can come back. I don't think it will be large. I don't think it will be of the scale that one would actually say that the policy direction has been turned on its head. But there could be a little bit, I would say a little bit of needle swing in that direction, if at all.
All right. So if there is a little bit of a needle swing in that direction, would you now start to look at consumer staples, two-wheelers? I remember you weren't a big fan of two-wheelers about a month ago.
Not really. I mean, I was a fan of two-wheelers a few months ago, and a month ago I said valuations look a little fairly priced kind of a thing right now. But I think rural-based companies should be focused on at this point of time. So I don't think one can yet make a conclusive call that they have turned. One cannot make a conclusive call across the board, but selectively, yes, rural-based. In any case, cyclically, the rural demand has been down for quite some time. So even cyclically, there's time for a rebound. The stocks, many of the rural-based stocks have not done that well, with the exception of course, tractor companies, which are at record highs at this point of time. And yes, one should focus on that.
And rural would be what, according to you? Would it be consumer staples? You've spoken about two-wheelers and tractors. How else do you play that theme?
There could be staples. There could be lower ticket discretionary products. So in fact, there is a point of view that even if the rural incomes does revive, even if there is more money in the hands of the rural, the benefit could be more for discretionary rather than staples. But that needs to be analyzed. So I think there are a lot of moving parts in the market at this point of time. And my preference right now is to take cognizance of moving parts, both domestic and global, and question the few strong trends which have been in force for the last 1 year or 2 years, and try and assess whether some of these can actually reverse or stall, at least temporarily.
Hi, Dheeraj. Good to have you on the show. What's new then? What else do you like? I mean, the market is hungry for ideas. In the near term, the headline index could consolidate, one would think. Maybe we go a couple of percentage points up from here. But in terms of other themes, what are you looking at? I recall Zomato, and we've spoken about it in almost every interview. So let's keep that one aside for now. But give us a new idea, that our viewers can work with from here on.
I think the largest focus at this point of time is on banks, because banks have been conspicuous by their underperformance for quite some time, and valuations have come down, numbers are looking okay. So that's one area which is very conspicuous by its underperformance, despite good numbers coming through, right? So another large sector which has been underperforming is IT services, but then you can see the reason for that. IT services revenue profile has been weakening over the last 12 or 18 months. And the hope of turnaround in IT services, which most of the analysts were pegging at first quarter FY25, looks like it's pushed out. So I would say a huge focus on these two sectors are required. IT services primarily because I think US economy just continues to surprise positively. So I just sometimes wonder for how long will the US companies resist from restarting the spending and reinvesting in technology. So there is no sign of inflection yet in IT services, but I think this is one space where we need to watch very closely. The slightest sign of inflection, and the stocks are sitting on some good cuts and good underperformance in the last 1 year or so.
All right, that's the banks. So you're referring to the private sector banks because they have actually underperformed the largest banks. So what do you do with the PSU banks? You know, two schools of thought. One would say that an SBI still has room to grow if they're going to be growing by that, 15% odd with ROEs of mid-teens. Then they don't need to come to the market to raise fresh capital, and also they have that stake in Yes Bank. While the other school of thought is saying bulk of the good news is in the price at around this 850 rupees. Your view on PSU banks?
I like SBI. I don't know about. There are a large number of PSU banks. I don't have views on all of them. But I think the couple of leaders still look good from a longer term point of view. From a shorter term point of view, as you rightly said, there could be a little bit of a rotation into private from PSU. That's highly possible. So I think the events of the last few months, not just election events, the events of the last few months, which is a weakening rural economy, signs of confusion out of the US, expectations of rate cuts now being firmly postponed till the end of the year. But the flip side of that is, which obviously means that the US economy is a lot more stable than what people believed it to be. A bit of rebound in China, a bit of an inflection point in China. A lot of these things can cause some mini cycle rotation in our market as well. So, the curve can rotate within the sectors. No conclusive signs of that yet, but I think it will fall into place within the next 2 to 6 weeks.
Right, 2 to 6 weeks. Dheeraj, you did speak about the IT services sector looking a little better because at some point the cycle will turn. That's one school of thought. The other one is that the cycle may have, moved structurally towards low-cost products, newer technologies, artificial intelligence, and that may structurally reduce margins for all the IT services companies. So, is that a risk? And that's also a benefit to a lot of the other players. So how do you play that then?
I think you will still require IT services of the kinds that we do. So, this is not the first time questions have been asked about the structural reasons for IT services to exist or go into a structural decline. So remember when there was cloud, similar questions was asked that with the cloud services coming in, do you actually need the traditional IT services? Before that, it was digital, and then now it's coming down to AI. AI can do a lot of stuff, and most Indian IT companies will adapt to actually use AI and benefit from AI rather than get completely wiped off because of AI, right? So at this point of time, while we may, it may sound a lot more intelligent to attribute the decline in IT services business to AI, but the fact remains that if we just actually look at the IT spending of most of the US companies, it's been on the they've been a little bit on a cost saving spree. And US is a very hardcore capitalist economy. Even if the analysts forecast that there will be a slowdown, the companies just scale back. So slowdown has not happened. The economy is doing well, but the fears of slowdown, recession, soft landing, hard landing, it just continues. And the companies have scaled back their budgets a little bit. When they come back, IT services will come back.
All right.
If you're talking about will IT services go back to 25-30% growth curve, I doubt it. But can they improve from here? Of course they can.
All right. Thanks a lot, Dheeraj, for joining in and weighing in with your thoughts on a multitude of sectors. Wish you good luck, and we will obviously keep coming to you for newer ideas as they come as well. But with that, let's talk about another company, focus on Manappuram Finance, a very, very special conversation. Why is that? Because it was the year 1949 when Mr. V.C. Padmanabhan established the company in the coastal village of Valapad, where people mostly depended on fishing for a livelihood. This firm obviously carried out money lending and pawnbroking on a modest scale. Mr. Padmanabhan actually, also ran his business on a capital base of 5 lakh rupees. And from then, 75 years later, his son, Mr. VP Nandakumar, who is the MD and CEO of the company, joins in on this momentous occasion. It's been a big, long journey. You obviously, lifted those capital curbs, took it to about over 1 crore, etc. And now at the cusp of where you are, everyone's looking for more value being generated, partly from the housing finance business as well. What's the latest on Asirvad?
So we have filed, it is in the DRHP stage. So we have some limitations. So within the limitations, yes, the date of, we got the SEBI approval, and when to launch the issue all depends on the market conditions. Our bankers are looking forward for the appropriate time to launch. It is yet to be decided when to launch the issue.
Had filed the papers, and that time you were looking to raise around 1,500 crores. So just trying to figure out how much will you raise, and what is the timeline? Can we expect it to come in the next couple of months?
That is what we expect. That because now the elections are over, the new government has come, and everyone believes that there will be policy stability. So we are also looking forward for that stability.
Okay.
And we expect that to launch in another 2-3 months' time.
Okay. All right. Mr. Nandakumar, we'll just come back to you, sir, but we have visuals of the Finance Minister, Ms. Nirmala Sitharaman, entering the Finance Ministry, the North Block, taking charge, greeting officials, and I think we'll have visuals from inside there as well. So there's the wave to the sort of crowd gathered there, media persons, etc. And we do hope there will perhaps at some point there will be a sort of soundbite after she takes charge for the record third time. I mean, so this is quite incredible as far as the Finance Ministry is concerned. So Nirmala Sitharaman taking charge as the Finance Minister in the NDA 3 government. But we have the Manappuram management with us, so let's continue the conversation.
Yep.
Yeah.
All right, Mr. Nandakumar, good morning. Nigel on this side. And first of all, congratulations on the anniversary. I'm looking at the valuations, and the street believes that valuation-wise, at least you have support from year on. You have another competitor in the market which is trading at far higher valuations. So that aside, let's get some numbers going now. On the gold finance business, what is the growth that you're guiding for in this year? If you could give us that number. You could break it up in terms of tonnage growth as well. And a quick comment, one of the large players in the gold finance segment is out of the market, and that happened in March. Are you seeing some incremental market gains for your company?
So this year, the gold loan growth is seen good because the post-COVID, our target audience, they were in difficulty. So their demand for credit has gone up. So our ticket size means our average ticket size is around 75,000, and the average life of the loan is for 3 months. So the customers are mostly from the middle class and lower middle class. Their requirement for money is the catalyst for our growth, key driver for our growth. And we hope they have started coming. So we expect around 12 to 15% growth during the current year. That is the trend also now.
And any incremental gains because one of the large players are out of the market?
So, that is distributed to all the players. There are many players here, banks, non-banks, cooperatives, etc., etc. So that is some marginal gains are there. Other than that, we don't see much about that.
Mr. Nandakumar, we'll just come back to you. Those are visuals coming in. I spotted Mr. Somanathan there. He's there, right there, in the background. The Finance Secretary. I think I saw the Revenue Secretary there as well, and the CEA I think was there in the picture as well. So so those are visuals coming in from the North Block Finance Minister's office, where she will take charge for in the NDA-3 government. As a finance minister, there is continuity, and it's one of the topmost jobs at the as far as the cabinet is concerned.
Be the most important person to track for the next month, at least until the budget.
Right behind Mr. Somanathan, who's also very, very closely sort of watched. Next to him, of course, is the Revenue Secretary, along with other top officials coming through. So, the top secretaries of the Finance Ministry, along with the Finance Minister, the customary formality of taking charge with that signature, and then hopefully after that we will have the a soundbite as well with her telling us what's top of mind. The budget, of course, is just around the corner, remember, and it's all going to be about, at least from a market perspective, expectations, what will find favor, what will be the focus, etc., etc., etc. So an indication, we'll see. So that is those are the visuals coming in right there with the Finance Minister taking charge. So we'll have the visuals up, and we will continue the conversation here. We'll stay on that for a bit longer. I think, okay, we'll come back to it when we have the soundbite. I think Mr. Nandakumar is back with, is of course holding on, he's waiting. Mr. Nandakumar, good morning, sir. Prashant this side, congratulations. 75 years, it's momentous, it's a long journey, it's, one of the oldest companies in the space from Kerala. Now, just a quick point, I don't think we've spoken to you, sir, and on that point about one competitor out of the market, that we don't know yet, but we do know that the RBI appointed audit is done, is finished. So we don't know when that will come back. But you're saying that it's an industry-wide impact. So whatever happens, it's not as if you specifically will be impacted one way or the other. I mean, it helped the industry, of course, with lesser competition. And as and when that competitor comes back, I mean, we'll see what happens overall. But on that 20,000 rupee cash dispersal rule which the RBI emphasized in the month of May, I think, middle of May, Mr. Nandakumar, could you tell us, is there an impact? Because from what I understand, I mean, this was because, of course, gold finance is such an old business and it was run in its own fashion, and there have been very, very, very little delinquencies. But now, of course, the RBI is insisting that everybody follow this norm. Not just some of the newer players, but also old veterans like you. Do you see an impact on growth rates, and what have you already seen? Go on, sir.
The impact is positive only. This direction came on 7th of May, and from 8th morning we have introduced that fully across the branches. One good thing for us was 63% of all the loans were in the online gold loan mode, which was through the bank account only. And the balance, some 23% were small loans below 20,000. So the difference is not very big. So as we have a seamless process, etc., already established here, we are the pioneers in that. So the impact was only positive, and we hope will be benefited because of this introduction of these.
So around 15% of your loans fell in that category, over 20,000 in cash.
Right. So,
but how would it be positive, sir, at the margin? Could you explain?
See,
this measure?
We cannot disburse anything more than from 20,000 and above. We have to disburse only into the bank account. Correct. So we have started this online gold loan dispersing into the bank account and operating through the bank account around 5 years back, and that was working seamlessly. It is very comfortable for the customer. They can avail the loan only then. They need to come to the branch and deposit it. Then thereafter, they can transact online 24 hours, 365 days. So they were using that, and more people are attracted. Now, as these are working seamlessly, we didn't find any difficulty in the transition to the new regulation, new guidance, and we have done that on the very next day of the instruction from the RBI.
Right. Let's talk about the other parts of your portfolio then. As the graphic tells us, the parts that are growing very fast for you, CV as well as home loans. CV, the industry is expected to not grow fast. In fact, some are expecting it to decline as well. In light of that, what's the sort of growth that you foresee for your CV portfolio and your home lending portfolio?
So these businesses were our horizontal expansion. These diversification was based on the demand from our customers. We have a trusted customer base, of which 80% of these customers are repeat customers. Customer loyalty in gold loan is very high. And they were asking about from this 1 million, 10 million customers. They were asking for some home loan. These are all affordable housing. Our average ticket size is below 10 lakhs. Similarly, for MSME loans, these MSME customers, gold loans are of shorter tenure. They wanted to have a longer tenure. They were ready to offer their shop building or their residential property as mortgage. That's why we have entered into this. So coming to the vehicle finance, around more than 50% of the customers are acquired from our own customer base, unlike other vehicle financiers. So our customer acquisition is low, and we have expanded this business only into around 20%.
Mr. Nandakumar?
Yeah.
Yes. Mr. Nandakumar, if you could give us one number. You have been helpful and given us that target for gold loan growth. For this year, the growth you're saying is around 12% approximately. For the non-gold portfolio, how much will it grow? Give us,
These are all small portfolios. Last year, these businesses have grown over 50%. And it is our expectation that the same momentum will continue.
So non-gold will grow by how much? 30%?
Last year it was around 50%, because the portfolio itself is not very large. Both vehicle and MSME portfolio, both put together was around 5,000 crores. Now we expect around 50% growth.
Okay, got it. And what about your NIM, sir? In the last quarter, the cost of funds went up, that's why 40 basis points got shaved off from your NIMs. But you have mentioned from year on, you're expecting cost of funds to stabilize and you're expecting your NIMs to improve. So give us a broad target, sir, for the coming year.
So as a part of diversification of our liability, we raised some overseas bonds where the cost of hedging was high. So the overall cost was high. That led to the increase in the overall borrowing cost. That is a major reason. So as we are getting a better growth compared to last year, we are confident about maintaining our targeted ROE of 20% during this year. So a slight decline in net interest margin is not a concern for us to achieve our target of
for NIMs that you have. You have an ROE target, sir, for 20%. You've said that you'll maintain your ROE at 20%. What would the NIMs be? Would we see them improve from last quarter levels?
No, NIMs may slightly decline. Even then, it is not a concern for us, because we are getting a better leverage during this year. So that it will be compensated with that, so that ROE of 20%, we are confident of achieving that figure.
All right. And we'll leave you with the question that we asked you first. Asirvad, the MFI IPO, you said it will be about 2 to 3 months from now. You've given us a timeline. You haven't given us the amount. You had an enabling provision of close to around 1,500 crores that you would raise. You would go with the entire size?
Yeah, that is what we want to do. But all depends on the market conditions. We will take our bankers' advice. So accordingly, we will decide on that.
Okay. Very quickly, sir, we have to ask you this. A couple of brokerages, they mentioned that Manappuram is a potential acquisition candidate. A quick comment on that?
So, this market speculation was always there. I used to hear for so many years But I don't think it will happen. It's only mere speculation.
So it's just speculation. You're not an acquisition candidate. Well, we appreciate you joining in, sir. Congratulations yet again on the anniversary, 75th anniversary. Hoping the next 75 are even better for the company and clearing the air with regard to you're not an acquisition candidate. Wishing you a good quarter and good financial year ahead. For the time being, well, we'll slip into a short break. Up next, we'll be joined by Ankur Rudra of JP Morgan, who will put the spotlight on the IT sector. Stay with us. Welcome back. Well, the markets are firing all cylinders as we speak. The Nifty has put on another century. We're up close to around 100 points odd. But the breadth of the market, that's something that's looking very, very good. Advanced decline ratio comes up for you. 5 stocks advancing for just 1 stock that's declining. Well, let's shift focus to the IT space then. JP Morgan says channel checks suggest no signs of spring in the Indian IT sector, and they prefer defensives with high growth names. Ankur Rudra of JP Morgan joins us on the show. Hi, Ankur. Good morning and always good to see you in. Well, tell us first up, how do you approach the tech space and what do you like and dislike?
Hey, thank you. Good morning and thank you for having me. So we think the IT services sector continues to see, demand uncertainty. This is the uncertainty that sort of percolated and persisted for over, 6 to 9 months now. And there is no clear sign of demand recovery momentum here. I think what we are hearing and seeing is that the underlying demand trends remain relatively unchanged and subdued. Companies continue to see larger contracts, which are very cost-saving oriented, but also to an extent driven by vendor consolidation, drive the action in the market, whereas shorter cycle deals continue to sort of miss in action. We are also sort of seeing the industries which were previously healthier, like the auto, aerospace, travel, etc., continue to do well, whereas sectors such as TMT continue to be under pressure. The one change we do see, however, is financial services looking a bit more healthier than before. So I think that might change over calendar 24. The other thing we also see, to an extent, a pressure point on the industry tends to be insourcing, and that sort of is driving the pressure on the sector. So in this context, what we like is we have taken a barbell approach to the sector. What we basically are telling investors is either go for defensive companies with which are higher quality, give you a huge amount of dividend or buyback support, or go for companies which will give you relative amount of outperformance over fiscal 25. So those are the two sort of ends of the spectrum we like.
Could you get a little more specific on what those two ends of the spectrum would mean in terms of a couple of names?
So we are not allowed to name, as you know, but as you can see among these stronger growth companies, we are seeing some of the mid-cap companies are growing a lot faster. The larger cap companies continue to struggle on an overall growth perspective. So you've seen the NASSCOM number last year. The industry growth was sort of low single digits. So we don't think at the moment we will see any meaningful acceleration from that. So companies which have that kind of a growth profile, but also give you dividend support, are the ones we like on one end, and the companies which can outperform the sector growth. And some of the names probably are similar to last year, which is what the other end of the spectrum we also like.
Now, the reason why I ask you is largely because, this morning there was a deal that came in for HCL Tech. Wipro's looking at some sort of AI foray as well. Over the last 12 months or so, Infosys and TCS are up around 16 to 19 odd %. So when you say stick to quality names, so one end of spectrum, I presume, would imply some of these names. And the second end, which is basically high growth, which according to you is outperforming here?
So like I said, among the larger companies, among the large cap companies, we haven't seen meaningful differentiation of growth for a while. Many of the names you mentioned were sort of growing in the region of the NASSCOM growth rates, and we really don't see a meaningful change either within the names or within the large cap sector pack. So only companies where the dividend yield is reasonable, let's call it, close to mid-single digit dividend and buyback yield is reasonable. That's one end we think is where investors might be protected on the downside. And on the other side, the companies which are growing, let's call it, double digits and above, which is about 10 percentage points ahead of the large cap peers. Or let's say on a 2 to 3 year basis, earnings growth can be either 10% or revenue growth can be 10% ahead. I think those are the two ends of the spectrum we like. I'm sorry, I can't get more specific.
Yeah, no, fair enough. Ankur, now Prashant here, morning. Because we are in a situation where participants and investors that we speak with sort of are generally of the view that index level valuations are not crazy, but some of the hot areas valuations are very high, so it's kind of tough to find new ideas. There is no real sign of a recovery in IT services. We got that point. But do you think if one were to kind of hold on, buy some of these IT names, and we have the reports, we'll put out the picks, you can't talk about it, understood. But if one were to hold these on for a few years, right, extend the holding period, that makes sense? There is a margin of safety here in some of these names, IT services. And given enough time, one will make money, decent money?
Yeah, I think what you've seen is if you look at the IT sector, right? So IT sector is sort of, underperformed so far this year. It's about IT index is about 8% below the Nifty. It's broadly in line over the last 1 year. It's underperformed on a 2 year or a 3 year basis. So then you have to go back all the way back to 5 years to see IT, or 4 to 5 years to see IT sector outperforming, which is basically during the beginnings of COVID. Now, what we are seeing in demand in the sector is, and why growth is not really coming through, is enterprises had significantly overinvested right after COVID, and that's still being digested right now. We are in the second year of, call it, technology spending recession, if you will. And typically this phase does not last for a long time. We don't think enterprises will be able to not spend on technology beyond a few years' time. Now, there are a few potential clearing events from a tech spend perspective, which can potentially drive performance in the sector. One of the events we continue to hear from our industry conversations is potentially, after US elections. The US presidential elections have been a source of uncertainty, which is adding to a potential softness, a continued softness this year. Also, the lack of rate hikes so far that was expected most of this year, a lot of enterprises are using that as an excuse to not spend. So if any of these two clearing events, or if not both, play out over the next 12 months or so, I think that can really help the sector. There's also a lot of conversation about generative AI, how that impacts spending priorities, and if IT services spending is getting reprioritized as a result of that. So if any of those debates are settled, we'll tend to see performance. So, and hence I think there definitely is an element of, I would say, defensiveness in IT companies, especially if you look at multiples now versus pre-COVID, they're slightly different, but mainly supported by dividend yield. And hence some of the high quality dividend yield supported names look, I would say, defensive, and look where the margin of safety is not very low, I would say.
So that's a yes. To my question, Ankur, that's a yes. You will make money if you buy and hold and wait, because it will turn. That's what I made out from your answer.
Yeah, what I would say is, in the short term, we are, I would say, circumspect of demand. In the medium to long term, we are optimistic.
Okay, all right. So you got to have time on your hands, time on your side, to be able to wait really as things come through. Ankur, we'll leave it there. Thank you very much for your time here on CNBC TV 18. A good conversation as always. And, we'll have you back on with the next result season, which is never too far away. Well, let's get some trading ideas as well. Mitesh is with us with what he'd want you to do. An hour's worth of price action, not quite an hour, but a 120-point move on the Nifty is what we have. 23,386 on the Nifty. So it's pretty solid out there once again. Mitesh, what would you do?
Prashant, I think the index is, just at the verge of that breakout level of 23,380, 390 zones. I'm just watching that closely. But that apart, I think on the stock side, Shree Cement could be a good buy with a stop below 26,800 for targets around 28,000. In fact, the entire cement pack is something which I like a lot. and Shree Cement is showing good traction as well. And that apart, I think, Z Entertainment, I think Sun and Z both are doing well. Sun is slightly run up, so the entry point is slightly better in Z. Z can be a trading bet with a stop just below levels of 164.5 for targets of 177.
Right, a couple of these infra names doing extremely well. We have Honeywell, which is up 3%, industrials, so to say. ABB is up around 3%. Decent traction is what we're seeing on Siemens as well and Cummins. So these four, names really stand out in terms of gains currently at the high point of trade for Honeywell, Siemens, ABB, as well as Cummins. Any of those you like?
Honeywell is something, which I'm extremely bullish upon. I think if I was to take a 12 to 15 month kind of view, don't be surprised if the stock goes double from here. So very bullish, very positive over there. It's more of an investment bet, but on the long-term charts, looking fantastic. So I think that's the only stock which I recommend because ABB and Siemens have already run up, and I think, some cool-off is needed on the short to medium-term charts, but this is just starting to break into that big movement on the upside. So Honeywell is something which I'll focus upon. If somebody wants to buy, keep a slightly deep stop at about 52,000. I think a target of 85,000 is the minimum, but I suspect we are looking at a 1 lakh kind of.
Mitesh, Sun TV, any thoughts? I mean, it's back at August 2018 kind of levels.
So Prashant, I just mentioned Sun TV. I think Z and Sun TV are both looking from a trading point of view. Sun TV, I think, getting past the 750 was a good event. Yesterday, we saw 750 being crossed on a closing basis. And now we have some option built up at about 800 strike, 10.9 lakhs call over interest is what it's showing. But my belief is that I think looking at the medium-term charts, this is a 900 rupee kind of a stock, but it will take its own feet 10. I would want to enter it on dips to about levels of 760 or so.
So much happening in the broader market. Mitesh, thanks for that. Look at Praj Industries. These were not in the mix in the morning when we started. 5.5% higher on Praj, if you can have that up. SCI was there, but Moil, manganese ore, that's up 5%. Stocks at about 534. Tanla Solutions is a big mover, 7%. It's the third largest volume traded name on the NSE. And HCC, which started slow, 3% after yesterday's big move. It's up another 7% today. So it's crossed the, it's crossed half a century, 50 rupees on HCC at this stage. There is Elecon Engineering, Gravita India, just some of the newer names which I didn't see earlier on. ITDC is up about 7.5%. Camlin Fine, Nesco is up 7%. And more. Gensol is up 5%. I think that's a daily circuit limit, 1,017 on Gensol. But Mangalam.
Well, Camlin Fine, that's the other stock which is on our radar as well. And Sonal's waiting by it as well.
Well, yes, Camlin Fine Sciences, that is in focus because the wholly owned subsidiary of the company, they have gone ahead and entered into a share purchase agreement. This is to acquire 100% stake in Vitafor Invest NV, which is in Belgium, and its underlying subsidiaries and associates as well. So there'll be the 100% stake that this subsidiary will be buying out. Vitafor manufactures and trades in products which cater to the animal feed industry. Now, the details are as follows. In the calendar year 2023, the company made revenues of 16.5 million euros. But it is a loss-making company. So there was a loss of around 1.1 million euros and the net worth of the company is around 6.78 million euros. The revenues, after being at around that 26 to 27 million euros in 2021 and 2022, they've come down to levels of around 16.5 million euros, as I mentioned earlier. Now, the consolidated debt is very high for this particular group that they have acquired. It's around 6.5 million euros. And this is the reason why the cost of acquisition here is only €1 because they'll be taking over the debt and the net worth to debt ratio is much higher, and this is the reason why the cost of acquisition is just €1. The company says the reason for their acquisition is that the group will use the facility of this company to augment and grow in the European feed and pet food market and also in the African market, and the product basket of Vitafor will be aligned with the company's group and marketing of the basket of their products which are already existing. Now remember, Camlin Fine Sciences is into shelf life solutions, aroma ingredients, health and wellness specialty chemicals, and also one of their segment is antioxidants for food, pet food and animal nutrition industry. So that is where they're trying to expand, and they see that this will be the big lever for growth for them as well.
All right, that's about Camlin Fine. Stock doing well, up around 5%. But a lot of stocks moving well and extremely well off lows as well. We had Container Corp. We've been talking about a lot of the other PSUs. Container Corp has now moved to the high point of trade. Tata Chem, I think this was one of the buys by Sudarshan, opened lower, opened in the red, and has recovered from there, has moved to the high point of trade. And TVS Supply, that continues to do well. So let's revisit TVS Supply first up itself. It's announced a new 5-year contract with Daimler Truck Southeast Asia PTE Limited. The deal value is actually undisclosed. The company had earlier told us that, they are targeting double-digit growth in the integrated supply chain solutions business in FY25. So obviously, this deal aids them meet their target itself, and then they are looking at 10 to 12% of revenues coming in from new business as well. What does all of this mean for their margins and eventually the EPS? Well, it looks like there could be sequential improvement in the margin as well. So actually, the management stock is materializing, at least for now, with one of the deals coming by, and that's what the street appreciates. Stock up around 6%. But that's about the equity markets. Let's shift focus to the commodity space. Manisha, what's the commodity you're tracking today?
Well, I'm looking at the rubber prices, Mangalam, because we're looking at a 3-year highs in the international markets for this one, and for the Indian prices as well. 200 rupees a kg has been breached, and this has happened after many, many years. Well, if you look at the rubber as a market, it has been in deficit for many years now. And in the international markets, major producing countries are looking at a lower production this time around. So there are weather concerns coming in from Thailand, from Malaysia, and from Indonesia as well. China as well, we're looking at Yunnan and Hemam. They have been hit by weather, one area by drought and the other by heavy rain. So we are looking at lower tapping numbers from here. For Indian markets as well, this is off season because it's started to rain in southern India. Remember, 74% of rubber is produced in Kerala, and because of monsoons there, the tapping there also is not happening. Within Malaysia as well, the natural rubber production in April saw a decline by nearly 20%. So everywhere that you see, we are looking at lower rubber production in the markets there. When you look at demand on the other side, well, that has been on the stronger side from tire and auto sectors. There are reports that major corporates actually are buying rubber 3 to 4 months in advance as well. So there is this immediate tightness that we have seen happen in the physical markets. As I said, the global markets are looking at deficit since 2021. And when you look at the year 2024 as well, the production numbers are lower than the consumption numbers, and that would continue to add the premium to prices, as you can see. Also, when you look at the Indian markets, we have been in deficit for various years now, many years that is. We produce around 8 to 9 million tons, while the consumption is way higher. So we tend to import anywhere between 5 to 6 lakh tons on a yearly basis. Take a look at the prices as well. It hasn't been a very profitable crop, by the way, to the farmers there, and we've seen prices at 117 in 2020, and in last 3 or 4 years it has been between 150 to 160. This year we're looking at an average of 175 a kg. If I give you a monthly breakup as well, it really has been in the last couple of months that we've seen the rubber prices continue to gain up. So currently trading at 200 rupees a kg for the RSS4 variety there, and the markets do anticipate that from here on as well you could be looking at higher prices because one, this is off season, two, the demand from the tire sector and non-tire sector in sense of rubber also is higher.
Manisha, thanks very much for that. That's a commodity space as things stand right now. Well, 150 points on the Nifty, which means that it's a new record high. And we've taken out the high from the last few days, which is 23,412 on the Nifty. And it's back there at records, making new records. Doing
the Nifty Bank, which is doing extremely well, up 450 points now, upwards of 50,000 as well. The Nifty Bank is still, I think, a little less than 1% away from record high, on the Nifty Bank, but it's the one which has led the up move. In fact, when we opened for the market, the Nifty Bank was on a bit of a back foot, was a relative underperformer, but has come back. And how HDFC Bank is actually the big contributor out there. HDFC Bank has moved to the high point of trade, gain of almost 1% right now, recovery from the lows, and that's actually led the Nifty Bank higher, and alongside that the Nifty itself, so a fresh record high. The question is, where from here?
Well, that's right. And both the pillars of the market actually are doing well because the Nifty Bank is up close to around 0.8%. You have the Nifty IT index that's up close to around 0.7%. So both the pillars of the market doing well, and that's what's helped us to move higher. What's not participating today is some of these FMCG-related names. They're just a week or so ago, they were having a super performance. They've come in for some profit taking. You have FMCG index that's a little bit under pressure. But the big story right now is we have made yet another fresh all-time highs backed by the two pillars, banks as well as
what Rhythm said this morning, it kind of, he put the numbers to it. He said every day, visualize that, every day in the morning, mutual fund managers have to invest $100 to $150 million each and every day. So if they don't do it, it sort of piles into $1 billion in a few days, right?
Yeah.
I mean, so that's essentially the challenge, which a lot of, and the local money, quantum of local money in terms of not discretionary, but SIPs, it is only snowballing into a bigger and bigger amount. As they say, gains beget gains. and we've not had, it's like a positive feedback loop, which is getting bigger and faster. And I think that explains a large
good
part of
is
these
that there is
gains.
a fair amount of supply coming in from the FIIs and also a lot of the promoters and other PE funds as well.
And
who
IPOs,
are giving you
for
all
example,
of that.
the Ola Electric IPO got its approval.
Yeah.
I think we'll see Swiggy fairly fast now, and many other large ones perhaps also waiting on the sidelines, which should use this opportunity, very buoyant markets, to get the valuation that they want, but which also means more paper in the market. We'll take a break. We're back with Arvind Sanger. He's with us here in our studios. He's, of course, with Geosphere Capital Management. That conversation up in just a bit. Okay, well, new record highs, and I think it's a nice moment to get in Arvind Sanger, managing partner at Geosphere Capital. He's with us here in our Mumbai studios, all the way from New York. Thanks very much, Arvind. It's good to see you in person. We always have those early morning chats over the line, but great to have you here. Arvind, I mean, record highs, and it's almost as if nothing happened. Last week and last Tuesday specifically, it did not happen, but it did happen. So there was a bit of a mini heart attack, and then the market moved on. And the momentum is very, very strong. What do you make of it? And your prognosis for the near to medium term?
Well, look, the best news from the market standpoint is continuity. And if I may be, delve into the political arena, which is not my specialty, it looks like the government is going to be more focused on the economic side, and they may have less ability to do some of the social agenda. So that means economics becomes even more important as a kind of a focus for the Prime Minister and the coalition. And I think, I know everybody talks about the big four from a cabinet standpoint. I would say the big three from an investor standpoint would be the finance minister, which really is finance minister plus the PMO. And then you have the commerce minister, and then you have the roads and surface transport. And I think infrastructure is important, fiscal discipline is important, and the Make in India, PLI, all of that is going on, that is important. But there are many other elements of the story. I think one of the missing pieces of the story is when do the private sector capex show up? I mean, we've been all talking about it, waiting for Godot, it feels like, in terms of private sector capex, but hopefully that is also going to show up. But I think so, the market's valuations are not cheap. That is the challenge.
Arvind, before we talk about markets, you were at the India-Pakistan game as well. How was it? Scintillating as ever. And I am hoping that you're here briefly in India and you're going to be back, in New York, and India will lift the World Cup. So I hope you get to witness that.
Well, it won't be unfortunately, the next matches after this round, the Super 8s are not in New York.
Oh.
But
I may be... It's a short flight away, you can definitely
I'm going to Barbados for the Super 8s, I may be going, and then, or whatever it's called, the next round.
Right.
And then we'll see, but the Caribbean and, and so I'm excited. We got to watch the stadium in New York, 34,000 people, which is a temporary stadium.
Yep.
Is larger than the stadium in Barbados, I think, where the finals are going to be, which is 28,000 So they did a fantastic job.
Made in just 3 months.
Yeah, it was a fantastic field. And actually, what I liked about it, I'm not a big T20 fan when it becomes 6s and 4s all over. This is where the bowlers were involved, so it was a much more interesting match.
Interesting game.
That's so much more interesting than the NTPCs and the other things that we speak about, right? But
that's right.
That is something that we have to speak about anyway, because you said the focus on the economy-facing sectors will continue more than consumer welfare schemes, etc. Would you still back the infra themes? And if yes, what are the names that you like there?
Well, we've played the infra theme more from the people like the steel and the cement and other construction-related companies. I think that the infra theme, there are other angles to it which we're looking at. Do we look at specific niches in the infra theme? There are companies coming public now which are in the renewable kind of infra build-out, because there's going to be a big build-out in not just solar and wind, but hydrogen, all of the other stuff. So in terms of infra, that is interesting. The whole green economy, which I think over the next 5 years could be interesting, although there's a lot of froth in some of the valuations, there are opportunities in some of the some of that. So I think there there are themes that we're looking at that are medium to long-term good, but the challenge in India is finding value at a reasonable price.
What about real estate? You know, the cement player as well comes into this real estate, and some believe maybe we're still starting off in that 10-year cycle that we've seen. How do you approach real estate names here in India? Some of them have done well, but yet some of them, case in point being a DLF, they're still not at the peak that we saw more than 10, 15 years ago.
I think we own a couple of real estate stocks. There's obviously the REITs that are there, which again, if the interest rate cycle is going to turn favorable, and the office occupancy took a dip and now has started to recover, that's one aspect to it. But the residential real estate cycle, I think, has a lot of room to run. And so the question is, do we go to NCR versus Bangalore versus Mumbai? And right now our exposure is to Mumbai, but I'm going to Bangalore, and I think that could be an interesting play. Delhi DLF we have owned in the past, we don't right now. But I think this is a national real estate cycle which I think has a lot of room to run. But I think the more interesting thing to us is trying to find, yes, real estate will play, but the whole financialization, real estate going to be as boom? When you had the last boom, real estate was the thing where a lot of savings went. So there's a financialization of the economy which creates other sectors. But yeah, real estate will be.
So Mumbai would be what? Oberoi, Godrej?
Oberoi, Godrej, Lodha, these are all plays on Mumbai.
Arvind, power is a space. Do you have any thoughts? I mean, we're seeing power cuts in NCR. I mean, of course, here in Mumbai, things have cooled down a little bit. But I mean, over the last many weeks outside of Mumbai, you're getting reports of Pune, for example, was facing power cuts. And the one big source of power demand is going to be cooling. And that, if trends and forecasts are to be believed, it's going to get hotter and hotter. I mean, power is a theme. And where do you look for ideas here?
Okay, so there are 2 or 3 ways to play it. One is, like you said, cooling. So air conditioning companies are interesting as a play. But in terms of the power sector, I think there are many ways to play it. Do we play it coal companies in India? Do I play it coal companies globally? India is going to need coal-fired thermal power. Unfortunately, yes, we like the solar and the wind stories, and we are looking at that area in terms of infrastructure build-out. But in terms of the biggest challenge, no matter what we talk about, climate change, is India is going to have more thermal power. Because at 7 o'clock in the evening, the power prices go through the roof because of the shortage of investment in thermal power. So, whether it is the coal companies like a Coal India, or it is NTPC or NHPC, which has had delays on its projects on the hydro side, there are those ones. There are the private sector ones. But I think power is a theme. India is going to have double-digit steel demand growth, close to double-digit cement demand growth, and close to double-digit power growth for the foreseeable future if this economy is going to continue to grow.
Speak about some new sectors emerging as investable opportunities. Is there anything new that you've put your money in right now?
Well, I wouldn't. I hope to come up with some new ideas on this trip. It's just I've just sat down 1 day of meetings, but my assumption is that.
Okay, let's put it this way: who are you meeting? So we get a sense.
Well, I met yesterday with the companies in a couple of companies in the solar space. I'm meeting companies in technology, in domestic healthcare, domestic-facing healthcare companies, and so the goal is to meet companies that will benefit from. I think healthcare as a theme, post-COVID, we had a little boom and we've had a little comeback. But I think domestic-facing healthcare rather than the conventional pharma companies is of great interest to us. There's disintermediation taking place in the fragmented distribution system, the fragmented retailing system. That's an area of interest to us. Technology companies that are doing innovative things that are India companies, not just an IT outsourcing story. These are some of the areas that we're looking at which could be interesting, which are not the conventional ways that people play the large cap liquid, Infosys, TCS type of names. So we're looking at more domestic economy rather than just the export facing economy.
Right, your phone was ringing. Maybe that's the next meeting. Thank you very much for joining us. Great conversation, and do visit us next time you're here. And in the meantime, we'll chat with you down that line. From New York. Thank you very much, and have an enjoyable visit. I think the market is holding nicely. We're up 140 points, and we're at 23,400 plus new highs in the first one and a half odd hours of trading. It's time for a quick commercial break here. On the other side, it's a special segment, is the economy. My colleague Lata will get chatting with Girish Kumar Kadam and K. Ravichandran of ICRA. And we also have Abhishek Tyagi of Moody's Ratings for an exclusive chat to decode the state of infrastructure investments. Stay tuned.